whether profitable public sector undertakings, PSUs, should be privatized to boost government revenues is a complex issue with potential benefits and drawbacks. Similarly, the impact of privatization on efficiency and productivity and the mechanisms for ensuring accountability in public-private partnerships require careful consideration. Privatization for boosting government revenues. Arguments for direct revenue generation. Selling profitable PSUs can provide a substantial one-time inflow of funds for the government. This revenue can be used to reduce debt, finance social programs, or invest in infrastructure. Reduced fiscal burden. Profitable PSUs might still require government oversight and potential capital injections. Privatization can relieve the government of these responsibilities and associated costs, allowing it to allocate resources elsewhere. Increased tax revenue. Private companies are generally subject to corporate taxes, which can contribute to long-term government revenue streams. If privatization leads to increased profitability, this could further enhance tax collection. Arguments against loss of future profits. Profitable PSUs generate regular income for the government through dividends. Privatization means the government forgoes these future earnings, which could outweigh the immediate revenue boost in the long run. Sale at undervalue. There's a risk that PSUs might be sold at a price lower than their intrinsic value, especially if the privatization process is rushed or lacks transparency. This would result in a suboptimal revenue gain for the government. Potential for monopoly creation. Privatizing highly profitable PSUs without ensuring sufficient competition could lead to the creation of private monopolies that may exploit consumers through higher prices or lower quality services. Privatization and efficiency/productivity. Potential for improvement. Profit motive. Private companies are driven by profit, which can incentivize them to improve efficiency, reduce costs, and enhance productivity to maximize returns for shareholders. Greater autonomy and flexibility. Private entities often have more operational freedom and flexibility in decision-making compared to government-run organizations, which can be hampered by bureaucratic processes and political considerations. Access to private capital and technology. Privatization can bring in private investment, leading to modernization, technological upgrades, and improved infrastructure, ultimately boosting productivity. Increased competition. Privatization, especially when coupled with deregulation, can foster competition, pushing companies to become more efficient and innovative to survive and thrive. Potential drawbacks. Focus on profit over public good. Private companies' primary focus is profit maximization, which might lead to neglecting social objectives, reducing service quality, or increasing prices, especially in essential sectors. Job losses. To improve efficiency and reduce costs, private owners might resort to layoffs, leading to unemployment and social disruption. Asset stripping. In some cases, private owners might focus on short-term profit by selling off valuable assets of the PSU, rather than investing in long-term growth and productivity. Natural monopolies. Privatizing natural monopolies, e.g., utilities, without strong regulation might not lead to efficiency gains and could result in price gouging. Ensuring accountability and transparency in public-private partnerships, PPPs. Governments can employ several mechanisms to ensure accountability and transparency in PPPs. Clear contractual frameworks. Well-defined contracts with specific performance indicators, service-level agreements, and monitoring mechanisms are crucial. These contracts should also include clauses on transparency, audit rights, and dispute resolution. Independent regulatory bodies. Establishing independent regulatory agencies with the authority to oversee PPP projects, monitor compliance, and enforce regulations can enhance accountability. Transparent procurement processes. Open and competitive bidding processes for selecting private partners are essential to prevent corruption and ensure fair value for public assets or services. All stages of the procurement process, including evaluation criteria and bidder information, should be transparent. Disclosure of information. Governments should mandate the regular disclosure of information related to PPP projects, including financial details, performance reports, and key decision-making processes. This information should be accessible to the public. Performance monitoring and evaluation. Robust monitoring systems should be in place to track the performance of the private partner against agreed-upon targets. Regular evaluations and audits should be conducted, and the findings should be made public. Stakeholder engagement. Engaging with various stakeholders, including civil society organizations and the public, can enhance transparency and accountability. Their feedback and concerns should be considered in the project's implementation and oversight. Whistleblower protection. Establishing mechanisms to protect individuals who report wrongdoing or corruption within PPP projects can help uncover and address accountability issues. Legislative oversight. Parliamentary or legislative committees can play a crucial role in scrutinizing PPP projects, holding the government and private partners accountable. Clear legal and regulatory framework. A comprehensive legal and regulatory framework governing PPPs, outlining the rights and responsibilities of both public and private partners, is essential for ensuring accountability. In conclusion, the decision to privatize profitable PSUs involves a trade-off between potential revenue gains and the loss of future income, as well as the potential impacts on efficiency, productivity, and the public interest. Ensuring transparency and accountability is paramount in any privatization or PPP endeavor to mitigate risks and maximize benefits for the public. A case-by-case assessment, considering the specific characteristics of the PSU and the broader economic and social context, is crucial.